Welcome back everybody to the next video. Now in this video we're going to be talking about support and resistance in a little bit more detail this time, okay? And instead of covering just reversals, this time we're going to also be looking into continuations. Now first of all, let's just talk a little bit about how these continuations actually form, okay, and why they actually form in the market, okay, to give us these accurate areas of new support and resistance, okay, that we can actually trade from after a breakout and a fail of an older support and resistance level. So if we have a little look on the chart, okay, if we say for example that, let's say that price was pushing down, okay, price then started to push up, and then it then breaks down again, and then it pushes up, and then it breaks down one more time. Now if we were looking at this, okay, what I would be saying to myself is, okay, well, how do we actually get involved in areas such as this and areas such as this? Now, these are areas that we would call the end of the correction, okay, and the areas in which the next impulse actually starts. So if we were going to look at these areas, okay, and ask ourselves the question, okay, well, how can we actually get involved in them? And whereabouts are they going to stop? How far are they going to pull back? Okay, we need to take that one step further and actually look at what happened previously, okay, and understand where would be the most logical place for more sellers, okay, to actually enter the market and continue these bearish moves to the downside. So let's say, for example, okay, that people in the market presumed that this low here, okay, was a strong low and it was an area of support. So let's say, for example, we've got this area in here, okay, and this will be our area of support. Now, price obviously pushes up, okay, it pushes up in here, and people now wait for price to return to this level, okay, and they start to enter long positions. So let's say there's lots of people buying, okay, at these levels just in here, okay, lots and lots and lots of buyers, and they're predicting, okay, that price is going to be moving to the upside. Now when they realize that price is actually wrong, okay, and it's not doing what they thought was going to happen, okay, they were wrong and price starts moving against them, this is where a lot of the emotions, okay, and the psychology is really going to start to get to them. Now, who knows, you know, these people might not even have stop losses on their trades, okay, or they may have really, really large stops, and, you know, they may just be sitting with this in drawdown, not sure what to do. They may be even, you know, buying more positions, you know, they could be doing anything. They could be selling, they could be buying, you know, or they're probably just moving their stop loss lower and lower, okay, just to make sure they don't get taken out of the trade, and they're hoping the price is then going to return, okay, to their initial entry. Now, in this situation, okay, price does actually eventually pull back, okay, and it gets closer and closer and closer to their initial entry line. Now, for these people who are initially sitting in drawdown, okay, these people are going to be kicking themselves, okay, they're probably going to have a different bias now, they probably want to trade short. Okay, they're also going to want to get out of this trade because they've been sitting here, you know, in lots and lots and lots of drawdown, and they're eventually now seeing all that drawdown disappear, okay, as price returns to their entry level, maybe even slightly above break even, okay, and what it's doing is it's giving them an opportunity to actually get out of the market, okay, reassess what's happening, and it may cause them to close their position, okay, or even look to enter short and even hedge. Now, when people enter a long position, okay, like they did in here, in order for them to close their trade, okay, they need to actually sell, technically, okay, to actually close that position. Now, this isn't a new sell position altogether, okay, but the process of buying to selling, they need to actually sell back, okay, what they initially bought in order to actually close their trade. So what you may actually see as price returns to these areas, okay, is some kind of premature selling, okay, which is these people actually closing their positions. So you might not necessarily see price impulse away like this, okay, but what you might see is you may see price actually, you know, so price may push up and then it may react a little bit, okay, and may move down slightly, and that will be lots of these bullish people, okay, closing their initial buy positions, okay, and that will cause price to drop down. Okay, you then may see some sort of consolidation. You may then see some kind of new formed area of resistance, for example, okay, and then you may see a drop to the downside, okay, with fresh sellers entering the market and starting the next phase of this down leg. Now, as well as that, okay, the reason that initially that this moved to the downside, okay, is because there were lots and lots of, big banks, institutions, big players who were selling heavily, okay, during this move to the downside, and that's what's really pushed price down. Now, at some point, these people who are selling are going to want to take profit on their positions, okay, and by them closing their trades, okay, is going to create this kind of level of cheaper demand, okay, and what it's going to do is it's going to just, as a reaction, cause price to pull back. Now, by doing that, okay, these people who are selling, okay, they're profiting on their sell positions, and then what they're going to want to do is, as price becomes expensive again, they're going to want to look to load up on more sell positions, okay, and that may just tie in with the fact that these initial buyers, okay, are also closing out of their buy trades in here, okay, creating that kind of consolidation. So then eventually price reaches this kind of area, and then everyone starts to sell back into the market. So this is kind of the basic understanding of why price actually comes back to these levels, okay, and why price then continues to move lower. Obviously, as we know, price tends to move in impulses and corrections. So after an impulsive phase, you're going to get this correction anyway, okay? And the distance that this is going to pull back sometimes can relate to, like I said, this initial area where people entered long, okay? But sometimes it won't happen. Sometimes you'll see price actually pull deeper, and sometimes you'll get, like shorter term, smaller areas of resistance actually holding, and then that will cause moves to the downside. Okay, there's lots of different variations of where price might actually react from, but like I said again, what we want to do is wait for price to actually come into these areas, okay, and then we want to see the type of reaction that we actually get. So say if price does come into this area, okay, and then we start to see our structural candlestick patterns, okay, we start to see our bearish candlestick patterns, and it's making sense, okay, and it may even be creating lower time frame areas of resistance. This will give us a great clue that price is then going to be moving even lower, okay, and this is when we want to then get involved in the market. So we don't want to be people who are buying in here, okay, at the wrong levels of support. We want to make sure that we're in the right trend, okay, and we want to make sure that we're following this trend of lower lows and lower highs. And then we're able to spot that price has started the correction phase, and then we want to identify the areas in which people who are wrong and they were buying in here are going to be getting out of their trades, and areas in which the bigger players, okay, are going to be profiting on their positions and looking to get back involved in more sell trades. So this is the general psychology of how this actually works. And so what we're going to do now is we're going to take this concept to the charts, okay, and we're going to have a little look through some examples of break retests, okay, looking at it on a number of different time frames. We're going to look at some trends and how they actually play out. We're going to look at some examples of when they don't play out, okay, and sometimes how price actually moves again higher, okay, or maybe it will tap into a higher area of resistance before actually moving lower. Okay, we're going to have a look at all different examples of that, so let's get straight into it. Okay, so now I've got the chart up on the screen. What we're going to do is we're just going to talk through, okay, the different areas in which these break and retests can be seen on the charts, okay, and the ways in which we can actually identify them to get involved in potential trade ideas. And what we need to work out, okay, is where the initial wrong support and resistance actually is, okay, and then where the old support and resistance actually becomes the new support and resistance. So if we just start, okay, at this bottom area in here, and what we're going to do is we're just going to work through price, okay, and talk about the different things that's actually going on, okay, at these different levels. So first of all, okay, the first thing I can see is that we're in this clear move to the downside, okay, we're trending bearish, and then we get this first push bullish. Now, if for example, okay, we were going to identify the last area of resistance before this break to the upside, okay, I would look at this level just in here. Now this level just in here can be seen for some people as an area of resistance, okay, it was a price level that was deemed to be too expensive, and it caused price to actually move even lower. Now some people will actually have this level drawn in, okay, and what they'll do is they'll actually look to get involved in this area, okay, and what they'll do is they'll end up selling positions just in here. Now, like how we described before, okay, people who are selling in this area in here, now when price goes against them and breaks through their trusted area of resistance, what it's going to do is it's going to cause them to go into heavy drawdown. Now we don't know where their stops are, okay, they could have a stop all the way up here, no idea, okay, and then they're just expecting price is going to eventually roll over, maybe move back to the downside. So when they're sitting in drawdown, okay, and they start to realize that price isn't doing what they want, eventually, price comes back down and it will actually return to their initial entry line. Okay, now this area in here can be seen as the first time that, you know, these people who were selling, okay, actually got back to break even. And that is why you get these wick reactions in here, because people are actually closing their trades, okay, and it's causing price to just react up and consolidate, okay, which we spoke about before. Now, after price actually consolidates, okay, in this area in here, what you can then see is that this then forms some kind of support, maybe on a lower time frame where it's a little bit more clearer, okay, and then this will allow new buyers to actually enter the market. So what you can then see is after these wicks happen in here, we then see price push up, okay, price then returns, okay, back into these new areas of support, and that is then when you see this doji candle, okay, these low test candles in here, which is showing us, okay, the price is now rejecting the downside, and it's also within our new area of resistance turned support, okay, and now we want to see prices continue to the upside. So that's just a clear example, okay, of how price can go from, okay, a potential move lower, okay, into a breakout and a retest, and then a move to the upside. So let's keep talking through price now, okay, and see if we can find any more examples. So if I just clear this up a little bit. Okay, so what do we see next happening? Okay, so after this happens, we then see this kind of push up to the upside. Now again, you know, this next pullback in here, where does it stop at? Well, you know, if we were to draw in, again, areas of potential resistance, okay, you can see how price breaks through these potential areas of resistance, okay? They turn them into support, and then price comes back down, and again what we then see is these wicks moving away, okay, which is showing us those, you know, people who are selling in here. They then start to close the positions, which causes this wick reaction and that low test candle. Now after we get this low test candle in here, what happens? Price starts to react, okay, we then get another test in here, okay, and that pullback in here is when people who are shorting, okay, now want to actually start buying long, and it's also where, you know, new players, okay, and also the big banks, institutions are going to be adding or taking more buy positions, okay, in areas such as this, which is then what causes this larger engulfing bullish candle to the upside. So what actually happens after that? So again, price pushes up, okay, where are the old areas of resistance for people who are still not sure where to get involved, okay, and they're going to be at these areas over here, okay, at these last swing points. So again, these last swing points in here become the new areas of support in these areas just in here. Okay, you can see price pushes up, and again it returns to these levels, and then you see that nice wick reaction where again it's people closing their positions and entering more long trades. So now we're starting to see this kind of, you know, trend taking place, and you can see the kind of reactions that we're having. Yes, sometimes they mitigate and, you know, and they fill these areas perfectly. Sometimes they wick through, okay, but just the general idea. Sometimes, like I said, you're going to find that price wants to move lower and actually mitigate into, you know, areas of support, okay, on different time frames. But generally, you know, you're going to see these kind of reactions, okay, and these kind of pullbacks before the next impulses to the upside. So after that, okay, you get this nice reaction up, and this time, you know, price starts to pull back, okay, it's a little bit choppy, we don't get that initial reaction away, okay, yes, you might have had some kind of zone in here, and then you'd be seeing price starting to close through it. Now that's the main key, you know, if you're starting to see price really closing through it and impulsing to the downside, then I wouldn't trust that area. You can see in these ones, okay, we've got wicks wicking out of every single one of these zones, okay, so it's showing us that clear rejection, okay, and that changing of hands, okay, from sellers into buyers. But in this situation, you can see that we're still getting bearish candles, okay, price is a little bit unsure, we've got wicks on both sides of the market, okay, and then price eventually moves down, okay, and we end up in a bearish move just in here. Now after this bearish move just in here, okay, we could then say, well, this is the last area technically of support that we had. Okay, so this area of support tried to become resistance in this area in here. You can see how we do end up consolidating around. Okay, price starts to become very choppy. There's definitely people, okay, who are entering long trades off of this support. Okay, they then went into drawdown, price then comes back up, gets them to break even, they close that position. Okay, there may have been more sellers, but instead, okay, price wasn't finished and wanted to come up higher, okay, maybe to test this area of resistance at the extreme just in here. So once we get, this test of this high area just in here, okay, this clear resistance that we've got in the market, okay, price then starts to move away from this area, okay, and we get more breaks to the downside. Now again, if we wanted to get involved in trades, where would be the last potential areas of support? So if we were looking in this leg in here, okay, where would we see support levels? Well, you could either use the low, which would be at this level in here, or you could use this pullback in here, okay, and then this move higher, which created this kind of swing point just in here. So what we could actually say was, okay, well, we've had the break of structure in here, okay, price has moved back to the downside, and then you can see that these areas of support, okay, have then become resistance in areas such as this. You can see that clear wick above, okay, and then that move away, followed by that consolidation, and then people entering short. Okay, that's why we then see those high test candles in areas such as this, and then what we see are those larger engulfing bearish candles. Okay, so this is what I mean when I said the price doesn't always necessarily break away straight away. Sometimes it needs to just consolidate around, okay, and allow people to actually get involved in fresh sell positions. So after that, okay, the market starts to push down nicely. Okay, we move to the downside, we keep pushing down lower and lower and lower. Okay, we then start this kind of retrace in here. So at this point, okay, again, we don't really know what level it could come to. The last real area of support was all the way up here. Okay, so that would be a potential area that price could return to. Okay, price could come up to here, and then we may have seen a sell-off. Okay, but instead of that, it wanted to just pull up to here. Okay, we created some kind of double top structure. Okay, it's some kind of continuation. Okay, just in here, we've had impulse, and then there's the correction, and then we've got the further impulse to the downside. Okay, and this is some kind of flag, some kind of double top. Okay, and then we then see a move continuing lower. So after the move to the downside, okay, where's the next level of potential break and retest? Well, this low, okay, now becomes the last area, which would have been the support for some people. So if we now draw this candle in, okay, you can see that we then get that reaction in here, okay, and this becomes the areas of interest, okay, for more continuations to the downside. Okay, if we then look again and we get a little bit more closer in this, you can see that we then have another breakout just in here. Okay, and again, what happens? We react to those areas of support, which have now become resistance. Okay, so support is turned into resistance to move lower. Okay, so price then continues to move down. Okay, if we zoom back out now, we can have a little look at what's going on. This becomes the next impulsive move to the downside. Okay, we then start another pullback just in here. Okay, and then, okay, we then see another move to the downside. So sometimes, okay, structures are going to change around and it's not always going to work. Okay, in this situation in here, you can see how price was moving kind of bearish, bearish, and bearish. Okay, we then tried to kind of break these levels in here, but we kind of rejected with wicks, and then we continued moving lower. We then, potentially had areas of breakout resistance in here, okay, but then price just smashed straight through it. Okay, we had a clear engulfing retrace candle in here, where you get the bearish down candle and then the bullish retrace. Okay, this then caused price to react. There was a little bit of consolidation in this kind of area, but for me that wasn't really showing me anything important. So then after that, what do we then see? So the next thing that happens is price breaks technically again to the upside in these levels in here. Okay, the next thing that we then see is areas of potential resistance that we had in here, okay, at these wicks just in here. Okay, then becomes the new test of support in this candle just in here. Okay, so you get the break to the upside, the movement back in here, and then you can see that we get those reactions, that wick rejection, okay, just in there, and then you can see that price pushes to the upside. So after price pushes to the upside, what happens? We get this sharp retrace, okay, just in here, and you can see that we then get another break of trend and we start to move back to the downside. So after we're at the downside, okay, we've moved back down, we turned bearish. Where is the potential pullback to? Well, again, what have we got? Well, we've got the last area, okay, of support. Now, this is the last area of support just in here, okay, and that is exactly what becomes the resistance of the next leg. So the resistance in here, okay, you can see that holds lovely, okay, and then you then see a sell-off, price pulls back. So again, another area would be areas in here, okay, we don't get those respects this time, okay, and then price moves lower. You then get new levels again in areas such as this, okay, and that is when you can see things like this happening. So what do we get? Okay, so we get an impulse, we get a correction, and we get a breakout. Now this low, okay, could have been seen as the support. So then when that then broke, price comes back to this level of support, okay, and you can see that we get those wick rejections just in there. So again, what happens next, if we just keep playing through price, we then get more sell-offs, okay, and we move to the downside. So after this massive move to the downside, okay, things are a little bit different. I mean, you could still technically look at these areas such as this, okay, and see the kind of reactions that we get to these kind of levels just in here. Okay, and then you see these sell-offs, but you know, primarily what's happening is price pushed down and then it's just completely and utterly retraced back up. And we've had sort of breaks of structures in areas such as this, okay, and then it's caused these sort of larger patterns, okay, and structures to actually form. So what happens next, okay, if we keep following along with the price? So the next thing that we see, okay, is that the price kind of pushes down here, breaks in here, okay, so you could say that we've got these kind of areas for potential areas of continuation, okay, which was seen as the last areas of resistance, okay, which then turns into the support. Price then tries to react and then it just rolls over and we start to move lower, okay. We then get the breaks of structure in areas such as this, okay, and again the same thing happens in here where the areas of support, okay, try to get tested, and in this example it doesn't really work very well, okay. By the time we actually break the low in here, we've kind of already tried to test this support and things are starting to get a little bit messy. You can see that we're kind of squeezing in this area now in here, okay. It definitely could be a sign of price potentially moving to the upside, okay. So I want to just wait now and see if we can find some clearer trends. So after this happens, okay, and we get this break back to the upside just in here, this is a little bit cleaner now, okay, and I can clearly identify an area of resistance, okay, which then becomes an area of support. So again, this area in here to potentially get involved in trades. You can see that initial wick reaction here, which will be people closing their initial sell positions as price gives them a chance to get out for break even, okay, and then you can see that price pushes up to the upside. Now after this, again, you've got these kind of extreme levels in here, but these are the situations where it doesn't tend to work that well. I mean, if you don't really get much of an impulse out of the high, okay, then we need to ask ourselves, well, what's really happening? Okay, are we starting some form of ascending channel if we're just breaking out and then pulling straight back in? Okay, you can see there's no real impulsive moves here, okay. What we do is we just break the high and then immediately we retrace back in. Okay, we then get some consolidating candles and then price starts to kind of move back to the downside. So, you know, there's a reason why, you know, if we don't really break away from anything, it's very different to this breakout, for example, from this level in here. Now, if we compared this breakout, okay, and this breakout, you know, what's the difference? Well, with this first breakout, you can see that we have these nice big impulsive candles, okay, which push away from that last level. Whereas in this leg, okay, what we get is no real push away, okay, we just get a wick and a rejection. So it was much cleaner, okay, to actually trade this level of resistance turn support in here, okay, and take that test because you've had that clear impulse to the upside, okay, for price to then return and give us that follow through. So after that, what actually happens next? Okay, we get a break back to the downside. And similar sort of thing again, okay, there's no real impulsive move here, okay. What happens is we break, but then we get, you know, this morning star formation in here. We get this really nice low test candle just in here, okay, and then price starts to push back to the upside.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So once price breaks back to the upside, okay, similar sort of thing. Not a real impulsive move in here, but you can see that this is a very nice wick down candle that we've got in here. And you can see how price has actually decided to stop in here, okay, and then start to move back to the upside. So after that, we start this bullish move up. Okay, again, I'd be looking at the areas such as this, but we don't quite get it. Okay, price keeps pushing up. Okay, breaking higher. And again, okay, we've got more areas potentially like this little high in here. Okay, causing these kind of reactions to areas such as this, where we break out and then we're retesting areas of potential resistance turn support. Okay, and then you can see that we then break down, okay, and price starts to move bearish again. So as you can see, what I'm doing, like, I'm just constantly repeating the same process over and over and over again. What I'm doing is I'm identifying the trend, okay, I'm looking at the nature of the market and the nature of the candlesticks. I'm identifying, are they impulsive, are they wicky, okay, what kind of candlestick patterns can I see, okay, and then I'm trying to identify my old areas of support and resistance, okay, and trying to find the new areas where I'm going to be able to get my breaks and my retests, okay, and then I'm looking at how I can get involved in the market. So if I keep looking at price, okay, what actually happens now, okay, we start to see more breakouts, okay, we break in here, okay, we don't quite retest, but we break lower, okay, we then push back up again. So it's, you know, price is quite consolidating here. You know, you can see how we sort of break to the upside, break to the downside, breaking back up, breaking back down. Okay, we're starting to form sort of a larger kind of range in here. Okay, and we just want to wait for some clear trending price action, okay, to actually get involved with potential trades. So the next thing that happens, okay, is price starts to move to the upside again. Okay, we get some kind of breakout of here. Okay, and then price kind of pulls back. But in this situation, okay, this is a clear example of when price doesn't always have to react to the old areas of resistance. So here you could say that price broke out of these highs just in here. Okay, so you could say, well, this is the area of resistance. As you can see, once we get the breakout, price completely ignores that and it pushes down to a lower level. Well, sometimes this is what's going to happen, okay, and when you've got these larger moves, okay, with not much of an impulsive breakout, okay, and sometimes you actually have lots of other areas of interest, okay, which could form new areas of support. So in this situation, okay, there's this sort of lower time frame area of support, which is actually the thing that holds, okay. So this is another good area to have in if we then get that confirmation that price could be moving to the upside, and of course it is, because that is then when we get this bullish engulfing candle. So after price pushes up, okay, we get some nice moves higher, okay. Higher highs, higher lows, pushing up. No real retests just yet, okay. We then see in here we get potential resistance. Now in this one, okay, you can see how price just closed through it, but we then immediately retraced back in. So give it another chance, you can then see that price holds this, okay, and these potentially are new areas of support, which then end up being respected, okay, and that is when you can then see these secondary reactions from areas such as this. Okay, so it's all about reading, you know, which trend are we in, okay, and what's actually happening, what kind of candles are we seeing, are there new areas of support that we can use, and then try and put that into some kind of trade idea, okay, to actually get involved in the market. So this time, okay, we've had quite a nice breakout here, okay, a nice breakout and a move away from our breakout line, okay. This then gives us a nice area of resistance, okay, to turn into support. So this is a very clean example, and you can see how again a clean example has come from a nice impulsive move away from this line. None of that break and you know, retracing back into the move. It's a nice strong break, and then it's a nice retest of the old resistance line. So again, okay, price then pushes up, and again, you know, we get a really nice breakout in here, okay, solid break to the upside, okay, in this area just in here, okay, and then again we've got these areas of resistance, okay, which have turned into areas of potential support. So again, we've got a new break and retest zone, one in here now and one in here as price starts to break higher, so it's given us more indication that price may be moving to the upside. Again, you can see how we get a couple of, you know, reactions to this area. So we get maybe some you know, some people who are closing their positions in here, and it causes these wick reactions, okay. And then when you get these kind of doji candles, these consolidating candles in here, this could show us how price is actually ready now. It's finished going down, and we're going to start another move to the upside. So after that, what happens next? So this time, okay, we break higher, and again we break up, okay, but it's not that convincing. Okay, we even create a double top just in here, so this to me is indicating that price is probably finished, okay, going up at this point. We've had a really nice move to the upside, and now we get a break up, okay, we get a double top, we get a nice hanging man candle, okay, in here, which is a low test candle, which we see at the top of a run, and then we then see obviously this bullish move, this bearish move coming in here, okay, which then changed the trend. So because the trend then changes in areas such as this, okay, it's a great indication that price may be reversing. So then, you know, when you start to see breakouts of areas such as this, okay, areas of support, okay, then become our areas of resistance now. So then as we break out, we can see these reactions in here, and the process just continues over and over again. So here, you know, price is quite choppy, okay, it's quite range bound. There's not too much clear price action. There's no real clear support and resistance zones, okay, so there's not that much to really draw in this kind of area. But again, as price starts to impulse, okay, and you see a little bit more volatility entering the market, okay, you can start to see there's a few more zones. So, you know, we break out areas such as this, okay, and in this situation, okay, you can see how we actually hold and respect those areas of resistance this time, okay. So this time we're just respecting the clean resistance within the leg. Lots and lots of reactions to this, okay, we're tapping in multiple times, you know, 1, 2, 3, a couple more reactions in here, okay, and then we start to sell off again. Okay, but before long we then actually change back to the upside and we start to repeat the process all over again. So here you can see that we almost get a tap into here, okay, with these two wicks of this previous resistance turn support. So exactly the same thing's happening all over again. So then we're breaking higher, okay, we're pulling back, we're breaking higher again. So then when you see, you know, breakouts of areas such as this, okay, these areas again of fake resistance turn into areas of strong support for us to see those retests, okay, just in here, and then price starts to move up again. So you can see, guys, okay, the process will constantly repeat itself over and over again, and it's just about getting that really clear understanding of what you're actually looking for, okay, where you're looking for these particular patterns, and just being able to draw it out, understand the market, understand everything that we put together already, okay, our support and our resistance, our trends, making sure, are we bearish, are we bullish, where are we breaking out, okay, our impulses, corrections, impulse, which phase of the market are we in? Okay, what kind of candlestick structures are we seeing? What kind of candlestick patterns are we seeing? Okay, putting that all together, looking at our wicks, okay, and our impulsive candles, and really trying to build a picture of where we think price is going, okay? And this is now how we can trade both continuations now in the markets, and you've already learned how to trade the reversals. So we're starting to put everything together, okay? So all we need to really look at now is how we can tie in multiple different time frames, okay, and then how we can actually kind of put that all together to trade in particular time intervals, and then we can actually look to get involved in trades. So stay tuned, because that is all going to be covered in the next few episodes, so you don't want to miss that, and I will see you there.
Be a dork.